What's happening, Mad Fam? Welcome to another day of the Bootcamp. Now, if you're new here, you're probably wondering, why am I looking at a video with a dude sitting in front of a screen with a mask on? And the answer is pretty simple. Yeah, folks, I'm just not one for the spotlight. I love trading. I absolutely love what I do. I'm going to run it straight to the point. It was not my intention ever to have a social platform, but I did it out of mere demand. A lot of people, I was helping a lot of people out of free will, and then yeah, it just literally exploded. So I'm super grateful for all the support. Thank you for each and every one of you for the support over the years. I'm wearing a mask because I'm not the dude for a spotlight. I don't like the spotlight. I don't like being in presence, and I mean, I get enough attention at home. I don't want any attention online. So me showing my face, I don't want public attention. I'm on this world, I'm not from this world. That's what I typically believe. So I'm not going to run around chasing attention, showing my face, and nothing against that. It's just not what I want for my life. I'm not going to, maybe one day I'll remove the mask. Who knows? But for now, I mean, it's a cool thing. I'm a big fan of superheroes. So why you should listen to me, it's up to you, honestly. I've been doing this for 10 years right now. I've been trading for 10 years. I absolutely love what I do. I'm literally addicted to helping people. It's like solving puzzles for me. If I see somebody struggling with something in trading, I'll go to the ends of the earth by identifying what that person is struggling with. I won't go until the ends of the earth to sort it out for you. I will take you to the water, but I won't force you to drink. That kind of parable right there. But I mean, I'm literally addicted to helping people. If I see somebody making a mistake, something that I did, I want to help that person. Why? Because it's literally like solving puzzles to me. I mean, I get that sense of, I gravitate towards a lot of gratitude in that way, knowing that I can help that person with that. I mean, it's like anything in life. If you're really good at something and you know you can help somebody, then just freaking do it, man. End of the story. This doesn't need any further discussion. So, in today's video, we're going to talk about a topic that I almost missed. Super honest about this. I almost missed it because I'm always trying to understand what's the best way to incorporate certain points in the trading world, because there's so freaking many. So I always try and think, how can I run my approach to you? And in today's video, we're going to talk about fundamentals, but not fundamentals like the boring fundamentals that everyone talks about, because I firmly believe not a lot of people really know this much about fundamentals. And I pride myself in doing research in what I'm doing. I pride myself in, I've got a big ass textbook. I've read numerous amounts of handbooks and textbooks of fundamentals and economic principles. I even studied economics. So it's up until this point where I kind of think I've found sort of a clue on fundamentals. And I've prepared a gift for you guys down in the description below. There's a link there with your very own fundamental textbook, I can say, or your fundamental presentation. I did it by the help of AI. Like, AI helped me summarize it in a slideshow format, so you guys can keep it with you at all times. It's completely free. Please just use it if you want to learn more about fundamentals, because the big problem is a single news release like NFP or CPI can move more money in minutes than most countries' actual GDP. If you know fundamentals, you've probably seen this, okay? And not a lot of traders know this, but a big reason that charts, they don't always respect your levels, is because today, up until 70% of trading volume comes from algorithms. Now that's got to give you a clue, right? That's one big part of my trading. I took that knowledge and I incorporated into my own. And the US dollar is involved in 85 or 88% of trading volume. So if you can spot that the USD is doing something, US dollar, United States dollar, you already know, man. Just got to follow the United States dollars, because it accounts up until 85 or 88, something like that, percent of the daily market movement. Just jumping straight into it, one thing I'm just thinking off the top of my head that I was always struggling with is I always wanted to jump on the numbers. I'll show you on the screen right now. I'm using Forex Factory. I use a few other like Bloomberg Terminal and stuff like that, but for the purpose of this video, it's free, guys. You can use Forex Factory. I love it. There's nothing wrong with it. But sometimes I will jump on my trade based on the actual. I see that the actual is, for example, better. than the forecast, and I see the number is red, I would sell. That's what I used to do, you know. But more often than not, it's more the expectation that drives the price. It's the expectation of that fundamentals. Like, is it a big shock, or is it just a casual fundamental market movement? You know, you got to focus on the expectations. So what are you expecting the value of that currency to drive in what certain direction? Are you going to be shocked? Or is it just going to be another Tuesday? You know, these are the type of things that you need to think about. And I'm here to make fundamentals fun because, well, I'm going to try my best because to me, fundamentals are boring as hell, man. I don't know about you guys, but to me, fundamentals, it was boring up until I really just tried to understand how to look at it. And with that being said, we're going to have a look at my top 10 economic variables or indicators that move the financial markets. Now, we're not going to read through the whole thing. As I said, I did prepare this for you. You guys can have a look at this. So first up comes the CPI, the Consumer Price Index. Now, it measures how much prices, everyday goods and services have increased over time. Now, this correlates with interest rates, right? And the bond yields and the currency strength weaknesses. So, of course, the interest rates is probably it is the most important thing if you're trading currencies. Hands down, in my opinion. Everybody has different opinions, but in my opinion, interest rates is number one if you want to trade some currencies. Now, the GDP is the total value of all goods and services produced in a country over a certain period. I even included some examples for you guys. Non-farm payrolls, the first Friday of every month. We all know this. This is a big banger. Interest rate decisions. Central banks sometimes move market more with just words calling forward guidance without changing rates at all. So this is typically like how can I say this? Like an expected rate. They expect more changes. I need you guys to focus on the word expect because that's very important. Unemployment rate and PMI, that's pretty straightforward. Trade balance and commodities, the difference between what a country exports and imports. And you guys really need to pay attention to neighboring countries such as Canadian dollar moves with oil. Australian dollar moves with gold and iron ore. So sometimes pay attention to the interest rates being released on Australian dollar. New Zealand dollar moves with dairy or agriculture. I don't really pay too much attention to that. Retail sales, also a big one. Geopolitical risk and safe haven flows. Now, this is not something that's prepared beforehand. Like, you cannot always see what's going to happen on your Forex factory when it comes to geopolitical risk or wars or safe haven flows. Like, it's not always pre-planned, like, hey, Mr. President, shit's gonna hit the fan. It's not always pre-planned, you know. So that's just something very important to take note of. Safe havens such as JPY, CHF, and gold. Those are safe havens. And then I typically just showed you guys how to read the basis points. Basis points is like when you count pips for technicals. Basis points is now how to count the fundamentals. Now, when you look at your Forex factory, pretty straightforward. You can look at filter. I typically only filter out my red and my orange ones, and I don't want to have a look. This is just my personal opinion. I don't want to have a look at New Zealand dollar. I don't want to have a look at CNY, and I don't want to have a look at CHF. That's just me personally, okay? So then you click on apply filter, and now it gives you this. It gives you the time, it gives you the date, it gives you the currency, it gives you the impact. And when you click on this red folder, this is how I started out. I had a look at the usual effect because sometimes lesser than, like if you look at the forecast for the actual, if you look at over here at the forecast of the actual, if the actual was lesser than, it does not necessarily mean it's bad for the country. So that's why I summarize this for you guys. I need you guys to start thinking in a way that's what is good for the currency. So if you look at CPI, it says actual greater than forecast is good for currency. So we know now that CAD has an effect, but we also know that CAD, Canadian dollar, moves with oil. So if you're trading oil and you see it at a key level after the news release, then you can take a trade based on what CAD's fundamentals said. So if it's lesser than, you see the actual greater than forecast is good for the currency. So if you see the actual is lesser than the forecast, you know that it is bad for the Canadian, then you know that oil is gonna react in a certain way. There's a lot more going on behind the screens, and I'm trying to really explain this in the best beginner-friendly way, because I know some of you are probably very advanced with fundamentals, some of you are just starting out, but it's very important to know that you always need to think about what is expected. So use this textbook in your advantage. Please, guys, I put it up there for you all to use. As I said, I use Forex Factory. I'll drop the link down below. And CPI, guys, very, very important to keep track of CPI. And then this way, of course, you can have a look at all the fundamentals for this week. You can even click on this arrow and look at the fundamentals for next week. Now, what you do then is, if you want to do some back testing, you can click on this yellow folder right here, and you can have a look at the history dates, and you can go back on your charts and you can have a look. For example, October 25, 2024 had 86.5 actual with a forecast of 85.6. This means you can go back on your chart and see what happened to euro dollar when the actual was greater than the forecast. Please, don't ever try to predict fundamentals. Don't ever say, well, my opinion. People who say they're fundamental traders, man, I'm just going to leave it at that. You can only react off from the fundamentals, because the big guys, the liquidity providers, JP Morgan and them, they already know the headlines before you do, bro. You get level 1 data, level 2 data, level 3 data with technicals. You also get platforms that provide the fundamentals sooner that we don't have access to. I'm not saying the game is rigged. What I am saying is, put your ego aside. Stop thinking you're going to be able to predict the news release, guys. And also, we sit with something these days that platforms, they do not necessarily allow you to trade fundamentals. So it's all good and well if you can scout out the potential opportunities during a fundamental release. There's very few platforms that's retail platforms that's going to allow you to do that. So please pay attention to that. My bet is it's better play it safe. I'll wait for 10 to 15 minutes after the news release, dependent on the platform I'm trading, and then I just take a trade reaction off from that. I never trade before a news release, never ever. That's very risky. Anything can happen. They can work on expected values, they can work on previous values. There's a lot of variables at play, and when we're traders, folks, we want to have as many variables in our favor as opposed to variables against us. So play it smart. Don't always think that your ego is going to let you get paid. Your ego is going to let you get burnt. Read up on the fundamentals so that you have an idea. Of course, if the interest rates are weak for USD, that's going to have an effect. These are some interesting things to know, but then you can know that when USD rises, for example, gold is going to play the opposing direction. So you can use that in correlation. This adds up to a previous bootcamp video we did with regards to correlation. So if you use fundamentals with your correlation and your key levels, I'm telling you, it's going to be game over. This was a basic introduction of fundamentals. It's a broad topic that will take a whole separate bootcamp just to talk about fundamentals. Me personally, as I said, I wait for the fundamentals to pass, and then I take a trade reaction off from that. Use this slideshow as your guidelines, and let me know in the comment section what you guys think. Peace out.